Assalamualaikum and hello everyone. So today my group, which is group 3, will be presenting about operating statement for MFRS 8 and interim financial reporting for MFRS 134. So before we begin, I will introduce our presenter. First, we have Damia Batrusha Afandi, me, Nur Anis Izzati Muhammad, Nur Dania Afrina Mardi, and the last one is Ummu Hani Azlan. Now, I will pass to Ummu Hani Azlan to start this presentation session.
Assalamualaikum and hi, my name is Ummu Hani binti Azlan. So I will proceed with MFRS 8 operating segment. What is MFRS 8? It basically a standard that guides how companies should disclose their information about their different business segments in financial statements. Also, it aligns with the International Financial Reporting Standard IFRS 8, and it focuses on providing clear and relevant segmental information for financial statement users. Okay, an operating segment is a part of an organization that conduct business operation which may generate income or incur costs, and whose operating results are routinely examined by the organization's chief operating decision maker in order to determine which resources should be allocated to the segment and evaluate its performance, and for whom specific financial data is available.
Assalamualaikum and hi, I am Nur Dania Afrina binti Mardi. So let's move on to the next part of our presentation, which is Chief Operating Decision Maker, or in short form CODM. CODM is not necessarily a person, but it is a function that is responsible to allocate resources, to make evaluation of performance, and to make strategic decision making based on the operational and financial data. CODM in most companies refers to a person or a group that oversees these responsibilities. Provided two examples of CODM from public listed company in Malaysia. The first one, we have Farm Fresh Berhad. So based on the report, we can see that the managing director and also the group CEO Loy Tuan E act as the CODM in the organization, as he oversee the daily operation and also to make strategic decision making. Similarly, in Maybank, the president and also the group CEO Datuk Khairul Saleh Ramli takes over the CODM roles, as he is focusing on the overall strategy and executive management. Next, we will discuss on the types of segmental reporting. Companies report segment performance through various segments. One of them, we have geographical segments. So this segment is based on the regions where the companies operate. It includes the reporting about the revenue, asset, and profit from the specific regions. And the second one, we have business segment. This segment is based on the various business activities or division of an organization. So these types of segmental reporting we can see through the Maybank annual report. The first one, for the geographical segments, Maybank has reported 25 billion ringgit from Malaysia, followed by Singapore, contributing 2.3 billion ringgit. And for the business segments, there are a few types of business activities offered by Maybank. The first one, we have community financial services that provide retail banking and SME financing. It contributes 16 billion ringgit in income. The second one, we have corporate banking and global markets that manage large corporate clients, and it generates 5.8 billion ringgit in profit. The last one we have from the business of insurance and takaful. It generates 978 million ringgit in profit.
Now I will proceed with two key benefits of segmental reporting to the financial statement users. Number one, it is to increase transparency and understanding. Stakeholders may better analyze a company's strengths and weaknesses through this breakdown, which provide clear understanding of how each section contributes to the overall financial health. We can see from the example segmental reporting of Maybank 2024, it breaks down the sales and profit by important division. So, investor that may curious on how well the business segment is doing comparison to other business, it can benefit from this clarification. In this case, community and financial services segments generates the highest revenue and profit, and these insights help to analysts assess where the company's profitability is strongest. Number two, it is to improve investor decision making. Stakeholder can evaluate the risks associated with particular company segments, and it can make strategic investment decision by knowing how each segment functions and its potential for development or decrease. So as an example, Maybank's financial statement segmental reporting shows how Maybank's revenue and profit before tax have been divided by business segment. By highlighting the differences in profitability, this segmentation helps stakeholders understand how each division affects the bank's overall performance.
Assalamualaikum, my name is Nami Batrisha binti Afandi. My student ID is 2024905063. So now, let's move to another part, which is part B, about the Interim Financial Reporting MFRS 134. So firstly, I will explain to you what is MFRS 134. So MFRS 134 is a standard that issued by the Malaysian Accounting Standards Board, MASB, that provides the guidelines for the preparation of the financial statements. MFRS 134 governs the preparation of interim financial statements, typically for quarterly or a half-year periods. It is compliance with the accounting principles used in annual financial statements. It requires the presentation of condensed financial information, including the statement of financial position, statement of profit or loss, and other comprehensive income, and relevant disclosure in significant events, changes in estimates, and financial performance. These standards ensures that interim reports provide timely, relevant, and comparable financial information to users, aligning with the requirements of International Financial Reporting Standards, IFRS, and also promoting the transparency between annual reporting periods. So that is all what it means by MFRS 134.
So next, I will continue the discussion for the second question. The question is, give two significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period. The first significant event and transaction is impairment of asset. The entity's financial performance and position may be greatly impacted if it finds that certain assets, such as property, plant, and intangible assets, have been impaired during the interim period. The impairment would cause the carrying value of the assets to be written down and an impairment loss to be shown in the income statement. This would lower the entity's profit and have an impact on its balance sheet by lowering the total asset. Next, the second significant events and transactions is acquisition and disposal of property, plant and equipment (PPE). The performance and financial status of an organization are greatly impacted by the purchases and sales of PPE. The acquisition of PPE increases the balance sheet of non-current assets value and may include debt or cash financing, which could have an impact on obligation or liquidity. Over time, acquired assets are depreciated, which reduce their book value and creates an ongoing depreciation expense, impacting profitability. In contrast, PPE is sold at its carrying value, which is calculated by deducting accumulated depreciation from the asset cost. Any difference between the sale price and the carrying value is recorded as a gain or loss in the income statement. Cash flow is also impacted by this disposal since the sales proceeds increase cash or receivables. It is essential to accurately identify, measure, and disclose this transaction in order to give stakeholders an accurate overview of the company's performance and financial health.
Okay, so now we move to the next slide, which is interim reporting periods for both current and comparative interim financial statements. In this question, we are choosing Maybank Islamic Berhad as one of the listed company in Malaysia. So, this company ends their financial on 31st December 2024. The company presents its financial statement quarterly, so the interim financial reporting is on the first quarter, which is from January 2024 until March 2024. So as we can see on the table, for the first one is statement of financial position during current year is at 31st March 2024, while comparative year is on 31st December 2023. For statement of profit or loss and other comprehensive income, on current year is from 1st January 2024 until 31st March 2024. Then, for comparative year, 1st January 2023 until 31st March 2023. The next one is the cumulative, since the company is reporting their interim on the first quarter, so the cumulative for the current year is on 1st January 2024 until 31st March 2024, while comparative is from 1st January 2023 until 31st March 2023. The next one is statement of cash flow. For current year is from 1st January 2024 until 31st March 2024. While comparative 1st January 2023 until 31st March 2023. The last one is statement of changes in equity. For current year is from 1st January 2024 until 31st March 2024, while comparative year is from 1st January 2023 until 31st March 2023. So I think that's all from us. Thank you.